All right, I'd like us to turn our attention to the introduction of our next speaker, Brad Rogers, Mining Director and CEO of Tippy Mines Limited. Brad joined Jupiter in August of 2022 from leading mining logistics company, BIS Industries, where he was Managing Director and CEO from 2015 and previously as BIS's Chief Financial Officer and Director of Corporate Development. BIS is a large production-focused mining services company and an industry leader in bulk mining logistics. Prior to BIS, Brad was General Manager Corporate Development, at ASX-listed mining, engineering and infrastructure company, GRD Limited, where he was responsible for group strategy, corporate finance and investor relations. He also led GRD's global renewables operating business in Australia and Asia for 3 years. Everybody, please help me welcome Brad to the podium.
Oh, medium height person. Thanks, Farai. Thank you for the introduction, and thank you everyone here in attendance, particularly our friends who have travelled the long, circuitous route from South Africa to be in Perth. I'll just put in a quick vote for the new Qantas CEO to reinstate the Joburg-Perth flight. I'm sure we'd all be much happier and less tired here today. I'm here to talk to you about our company, Tippy Mines. We are a South African-focused company today. I'll talk you through our strategy of growth, but that strategy of growth is firmly focused on South Africa. We've had a very positive experience in our over 10 years now since that mine we're invested in, Tippy in the Northern Cape, commenced operation. And as I'll explain to you in a moment, we're intending to grow in a way that is focused on South Africa, bringing offshore capital to South Africa, but executing in a way that maximises benefit for South Africa and our local communities. I'm a little bit intimidated by my 15-minute timeline here, so I'll move quickly through the slides, but this is on Jupiter's website today. So Jupiter is the largest manganese-focused pure-play miner listed on the Australian Stock Exchange. We are that way because we own 49.9% of an excellent Tier 1 manganese mine called Tippy. I'll show you where that is in a moment, but it's in the Northern Cape of South Africa for those familiar. You can see on the page, bottom right-hand corner, the key investors in Jupiter, the largest of which is a very successful, proud empowerment company called Inson Bentley Holdings, and they are our largest co-investor at the Tippy Mine level as well. So this is already an example of great partnership between, as Errol said, Australian capital and a South African ore body that has proven, we think, a very successful case around operating within South Africa, and that is why we have the confidence to have announced the strategy we have to grow our business focused only on manganese and South Africa. Jupiter was listed in 2018. The strategy, until we announced a new strategy earlier this year, has been to stream dividends for the benefit of Jupiter shareholders from that great underlying mine that I'll show you more about in a moment, Tippy. The company has done that successfully, so successfully in fact that we've paid around 94% of our current market capitalisation in dividends to our shareholders over the last 5 years, and we've got 120 years of mine life remaining in that underlying mine that has supported those dividends. Hence why we think there's a good case to do more to grow this company whilst continuing to pay strong dividends. You'll see there that in addition to paying 94% of our current market cap in dividends in the last 5 years, that equates to a dividend yield of about 13% over that period against an ASX average of about 5.2%. So this has already been a success story. We are keen to continue, as I say, paying good dividends to our shareholders, but we think that there's a great opportunity to grow and to grow in a way that brings benefit to South Africa, continuing the success story there to date. And I'll give you a little bit more information on that in a moment. Tippy is one of the largest 5 producing manganese mines in the world today. As I said, it's got a very long mine life remaining and it's a cost-efficient mine. It resides in a part of the world, the Kalahari Manganese Field, which is 32 kilometres north to south and contains not just 36% of the world's production of manganese today, which is the leading share by production, but it has 73% of the world's reserves. So I'll show you in a moment why we think that there's an opportunity to grow, but there's a great incumbent ability within South Africa to continue to grow the resource that's there, because there is an excess of reserves over production by market share. Our mine, Tippy, is highlighted in the yellow box you can see there at the bottom left-hand corner of that photo. You won't be able to make out the names of all of those mines, but hopefully you get the point that these mines are packed cheek by jowl, really richly endowed part of the world in terms of manganese. There are overweight in terms of the number of manganese mines in that stretch of land there that are in the top 10 manganese producers in the world, and definitely overweight in terms of the amount of mine life remaining, and therefore the ability to expand production if there's an opportunity to do so. Just quickly on Tippy, as I said, it is inarguably one of the world's premier manganese mines. Again, very small there, but you can see sales have been quite stable out of Tippy at 3.5 million tonnes per annum. The mine has installed crushing and screening capacity of 4 million tonnes per annum, so we have some ability to increase that production based on already installed capacity. You can see the bottom line on that top left-hand corner graph as well, which is our cash costs, which have been low and stable relative to the manganese price, which is the middle line on that chart. And the obvious takeaway there is that this mine has been cash generative and profitable throughout the manganese price cycle, including now when manganese prices are quite low. Tippy also has a very long mine life. I haven't shown all of the manganese mines in the world there, would need a much larger slide for that, but I've called out some of the more significant ones, and I've called out the average within the Kalahari manganese field, which is quite long, 78 years for those major mines there. Tippy is the orange bar on that chart at 121 years of mine life remaining. So we're in a nice position where Tippy and Jupiter have zero debt. The mine is established. It's been operating successfully for more than the last 10 years, supporting these great dividends because of its cost position, and we have 121 years of mine life remaining. Tippy is very proud, and so are we, of the ESG performance at site since commencement. I've shown a couple of the key KPIs that we are focused on in terms of our stated goal of continuous improvement, in terms of Mining Charter 3 outcomes and broad-based black economic empowerment outcomes as well. We're proud that we're continuing to improve that, and that is a real focus at site. We don't have time for all of the great examples of the work that's occurred on the ground there, but I can tell you that we at Jupiter, all of our partners in this situation and the management at site, are very focused on this and very proud of it, and it's part of the brand and the way we intend to continue and grow. All of that, in terms of cost curve positioning, large and consistent production, goes to a mine, as I said before, that has produced good earnings and cash flows through the cycle. Bottom right-hand corner of the chart shows you that. You can see the EBITDA profit and also the manganese price, which has been under the 5-year average for the last couple of years. Notwithstanding that, the mine has still produced good economic outcomes. Manganese is constructive for growth. You can see here the demand and supply outlook over the very long term, out to 2050, and this is from Bloomberg. Supply in manganese is going to contract over that period of time, and that's because you've got some very large, significant mines that will come to end of mine life, including some here in Australia. As I'll show you in a moment, South Africa is by far best positioned to respond to that challenge. There is going to be new sources of demand as well from EV batteries, and that is part of our strategy, whereas steel is going to see strong and steady, or slow and steady rather, population level growth. This is the point I've made a few times here. It's showing the major manganese producing geographies in the world. South Africa is already the largest producer of manganese in the world by some stretch. But you can see on the page here the point I've been making, which is that the reserves over production by market share is quite pronounced. And so as we see supply in other parts of the world starting to contract, very good long life mines coming to end of mine life, South Africa is really best positioned to be able to respond to that opportunity over that longer period of time. And that is because, as you can see on the chart there, a number of the large already existing producing mines in the Kalahari manganese field that are listed on this page have quite long mine lives remaining. Tippy is highlighted at the top of that page there. The mines are listed from south to north. Tippy's at the very south of the KMF mine shown on this page here. But you can see the point I was making before as well. They're all quietly packed together, 32 kilometres south to north, and you've got all of that existing incumbency, in most cases apart from MN48 already operating. So we've announced a strategy earlier this year in order to grow against that backdrop and against that starting position that we already have, and that aim is to be the largest manganese producer in the world in the next 5 years, whilst maintaining the reputation we think we've already established, but ensuring we continue with this around customer reliability, responsibility with respect to South Africa and our more local communities, and continuing the robust investor returns that we have already commenced. We will do that by focusing on strategies within these particular areas, 4 pillars of our strategy. The first, fittest in the field, i.e. Kalahari Manganese Field, is about continuing the cost leadership that Tippy has already established. That's obviously important to have a sustainable business. We think there are improvements around logistics, and that's my most immediate background before joining Jupiter a year ago. Cleaning up our marketing processes, which are a bit complicated at the moment, and putting in some infrastructure at site to eliminate a mobile equipment rehandle. The main thrust of this strategy, though, is about growth. As I said before, there is an opportunity to organically increase Tippy's production from 3.5 million tonnes per annum on average to 4 or maybe more, and also some opportunities we think we're well positioned for to consolidate within the Kalahari Manganese Field. Notwithstanding it's a very significant long life endowment manganese field already, we think that due to the ownership and situation across the field, there's an opportunity for Jupiter to play a role in valuably consolidating some of the ownership of those mines. We want to do that in a way, as I said, which is very much focused on ESG, and so you can see the third pillar of our strategy is about executing that exciting growth in the right way, continuing the strong focus around the South African metrics that I've just mentioned before. We are proud of our track record and our partnership with respect to empowerment, and we intend to dovetail that into our ESG approach so that investors outside of South Africa can better understand broad-based black economic empowerment. And we think that that's a benefit we can bring, hopefully, to an understanding of mining investment in South Africa more generally. We also have a plan to put in solar at Tippy. That's frankly a no-brainer. We've got our own power right now, but it's diesel-fired, so putting in solar has an obvious business case and ESG benefit. And we think we also have an exciting opportunity to take some of our existing production of manganese and direct it into downstream processing for application into the EV battery market. Manganese is a battery mineral, and it needs processing before it can be utilised. We think we're well positioned with respect to our investors. We have AMCI and POSCO as our second and third largest shareholders. Both of those are active in this particular space, but also because we're already a major player in the manganese space. So we're looking at the right way of getting into that market, and we've got a business case due for completion by the end of this calendar year in that particular area. Super busy slide that just breaks out the initiatives and the good things that will come in terms of Jupiter business benefit, and this links to those strategy objectives that I just mentioned a moment ago. This slide's very important. There's a lot going on behind this slide. We are proud that we are a operationally South African business today. Our mine, the source of those great dividends we have seen, is in South Africa. We do think that there's an important role between the partnership of Australian and offshore capital, but it's also more important that we execute this growth in a way that does bring maximum benefit to South Africa and is thoughtful of the way we do that. So there are a number of initiatives in how we seek to execute our business plan with respect to board composition, management composition, branding of Jupiter, continuing to focus on and be proud of ESG, but also within that particular relevant South African elements of ESG that we'll be moving forward with, so that Jupiter is, wearing its South African pride on its chest as we move forward. The investor value proposition out of all of that, we think, is quite compelling, and the three elements of that are shown on the slide here. I've raced through the strategy. There's a much longer form strategy that's on our website. We released it on 31 March for those that are interested, but we are committed to continuing our current dividend policy that has supported an average yield of 13% over the last 5 years. There is growth upside. We plan to use equity in order to grow in the right way within South Africa, and so that will drive earnings growth in line with that production growth. There's also manganese price upside. We are sitting here today at around 5-year low manganese prices, so that's baked into the Jupiter share price today. So continuation of dividends, as well as driving that growth that we've announced, as well as manganese price upside as the manganese price continues its cyclical journey, which should be upwards relative to that average. So in summary, Jupiter's the largest manganese miner listed on the ASX today, and that is because we own that significant share in a very good, very successful mine in South Africa. The market for manganese is conducive for growth, a little bit because of demand, but a lot because of what's happening in supply around the world and South Africa's position to be able to respond to that. We have a strategy that is announced in order to frame growth around that macro opportunity, and we think that we are well positioned to be able to get after that growth, and we will execute that growth in a way that optimises outcomes for South Africa and our local communities, and we think all of that adds up to a strong investor value proposition. Thank you very much. Almost hit the time. Thanks, Brian.